Welcome to the Deep Dive. This is where we sift through a whole stack of interesting sources, articles, new research, plus our own notes, and we boil it all down.
Yeah, boil it down to those key nuggets, the stuff that really cuts through the noise.
Exactly. And our mission today is to give you a shortcut, basically, to getting properly informed on something it's really changing our relationship with risk and with money.
And even just how we think about our own opinions, right? Like every casual thought about a game.
Totally. The rise of sports betting apps across the U.S., it just feels like this new reality where, every hunch, every little prediction you have about a game.
Instantly monetizable, just like that.
Right. Effortlessly. And it's moving beyond just being entertainment, isn't it? Some people are calling it Gamble America.
Gamble America, yeah. A society where our psychological weak spots, they're not just known, they're being engineered, meticulously leveraged for huge profits.
Okay, let's unpack that.
And we really have pulled together a pretty exhaustive stack of sources for this one to give you that rounded view.
Yeah, what have we got?
So our main stuff includes this really detailed analysis from Kyla's newsletter. It draws a lot on John Cohen's book, Losing Big, The College Sports Betting Crisis. A really powerful book.
Heard good things about that one.
It is. And then we're weaving in corporate overviews, some financial insights into the companies kind of powering this whole online gambling world.
Companies maybe people haven't even heard of.
Exactly, like Gambling.com Group or Evolution AB, they're kind of behind the scenes. But this deep dive, it's multifaceted, It's not just about placing a bet.
No, it feels much bigger.
It is. It's about this larger societal conversation. Like, how do we decide which human weaknesses, which impulses are okay to make money off of? From the really tough personal stories of loss, all the way up to the super sophisticated financial infrastructure that makes it all possible, and the wider societal impact.
So our mission here is to understand how those lines between entertainment, speculation, maybe even addiction, how they've been deliberately blurred and very effectively blurred, it seems.
Very effectively.
Okay, let's maybe start with a story, something that really brings home the personal side of this Gamble America thing.
Yeah, a cautionary tale.
Definitely. This one comes straight from John Cohen's book, Losing Big. It's about a young guy named Kyle.
Ah, yes, Kyle's story. It's quite something.
So picture this. January 2023, Kyle's working from home, like, so many people were and still are.
Standard setup.
Right, dual monitors. But on one screen, next to his actual work stuff, he's got sports betting apps running constantly, tracking odds, making bets. And here's the thing. He was winning, like really winning, at least at first.
That's often how it starts, isn't it?
Seems like it. The sources say he made thousands of dollars that month. Thousands. He told Cohen he felt totally invincible.
And that right there, host, that's the really insidious part. That feeling invincible. Yeah. That initial success, it wasn't just about the money in his bank account. It fundamentally rewired how he saw himself, how he saw reality.
How so?
Well, Cohen's book details how that overconfidence just bled into everything else. He got so sure of his own judgment, right? Yeah. So his boss disagrees with him on some project at work. And Kyle, who was apparently usually pretty measured, he pushes back hard, gets into this confrontation he probably never would have otherwise.
Oh, boy.
Yeah. And the immediate result, fired. Just like that.
Wow.
And the spiral just continued. He then takes his unemployment checks, the safety net.
And bets with them.
Bets with them, loses thousands more. Thousands upon thousands in just 6 months.
Oh, man.
The story ends, and it's just heartbreaking, with him having to move back in with his parents. Totally broke, emotionally devastated.
And he had that quote, didn't he? Something like,
"Gambling tore me apart. Just raw regret."
It's chilling.
Yeah.
Just how fast it all happened for him. And you're saying, expert, this isn't just some one-off extreme case. Yeah. This pattern is actually common, especially with younger people.
Tragically, yes. It's not an outlier. John Cohen's research really digs into this. For young people, especially, young men, late teens, 20s, their impulse control is still developing, right? And there's often this natural tendency towards risk-taking, which can be amplified.
Amplified how?
Well, combine that developing brain with maybe a personality that's already kind of wired for risk.
Yeah.
The thrill of the chase, believing you're smarter than the average person, wanting quick rewards.
Okay, I see. Fertile ground.
Exactly. But it's more than just their natural tendencies. The system itself, the apps, they are deliberately designed to exploit those exact vulnerabilities.
But the apps aren't just neutral tools.
Not at all. They're expertly crafted. The interfaces, the notifications, the instant feedback.
Yeah.
It all leverages psychology to keep you engaged, keep you betting, and crucially, rewarding those first wins, making them feel amazing.
So it's not just that young people are wired for risk. The system actively rewards it, trains it almost, at least initially.
Precisely. It conditions and rewards that risk-taking, creating that powerful memory of the win.
So that initial success, feeling invincible like Kyle did, that's actually part of the plan, part of the engineering.
Absolutely. It's a critical hook. But, the picture isn't always quite so bleak, is it? There's nuance.
Right. Like Kyle's younger brother, Ryan, also in his 20s, also into sports betting. He had a different take.
Yeah, Ryan's perspective is fascinating. He kind of represents that other side of the coin, or maybe the tightrope they're walking.
How so? He saw it more as entertainment.
Yeah, he compared it to Robin Hood trading, stock speculation that a lot of his friends do. He felt there was potential there if you used it correctly, systematically.
But he knew most people don't.
Oh, yeah. He was very aware of the predatory marketing, said it's designed to hook you, make you not want to leave. He knew most people are just chasing the big parlay, the jackpot,
Like a lottery ticket.
Pretty much. He even admitted gambling itself is fun, it's ancient, universal. But here's the key difference between him and Kyle.
What's that?
Ryan pulled back. He eventually slowed down his betting, said clearly, I really have slowed my betting just because it only has gotten progressively harder and I don't love losing money.
So he recognized the shift.
Yeah, and he even mentioned preferring the stock market, felt he had more control there, a clearer path maybe.
That really does highlight that super thin line, doesn't it? Between fun and, well, destruction.
Exactly. Both Kyle and Ryan, smart guys, analytical, they understood the risks on some level.
But Kyle crossed some kind of threshold.
John Cohen calls it an invisible dopamine threshold. Those early wins just completely rewired his brain's decision-making, sent him down that spiral.
Whereas Ryan, he saw the warning signs. He managed to step back.
He recognized when the system wasn't working for him anymore, when the funds stopped. And crucially, he acted on it. He retreated. It shows how the same starting point can lead to such different places, but the system, well, it nudges you towards Kyle's path.
Which brings us back to John Cohen's point, that initial success isn't the goal, it's the danger.
Absolutely critical insight. It flips everything, doesn't it? He really stresses that, especially in this new Gamble America. Winning early, that becomes the problem.
Like it gives you that false sense of an edge.
Precisely. That massive dopamine hit from an early win creates this dangerous feeling, this illusion that you figured something out, that you're special.
Like Kyle thinking he was invincible.
Exactly. Cohen puts it so bluntly. He says, you win your first bet and you get really high off of the dopamine from it. That's how they get you.
Wow.
That I won my first bet on Marquette, so I must be awesome at sports betting. Bettors don't realize that's actually the dangerous part in how they get you.
So it's not about being bad at betting. It's about being good once, early on, that gets you hooked.
Yeah.
That is so counterintuitive.
Isn't it?
And it explains all the marketing. Those no-sweat first bet offers you see everywhere. They're literally designed for that.
Exactly. Maximize the chance of an early win. Trigger that dopamine rush. Create that feeling of having an edge.
They don't just want you to try it. They want you to feel that high, so you keep chasing it, even when logic says stop.
It's a perfectly crafted psychological trap. Textbook behavioral design, operant conditioning.
Designed to exploit what? Overconfidence.
Overconfidence, definitely. The power of dopamine. And, critically, the total lack of friction, making it effortless to bet.
And this works particularly well on young men.
Statistically, yes. They're more prone to overconfidence and, sadly, to developing problem gambling.
And that slogan, never waste a hunch.
Oh, yeah. That one's brilliant, isn't it? Turns a random thought, a gut feeling about a game, into something you should monetize. Instantly.
Like your casual sports knowledge is actually valuable investment advice.
Exactly. It collapses the distance between just having an opinion and making a financial transaction. It convinces you your feeling is an asset.
So the apps exploit your belief that you're right, more than whether you actually are right.
That's a great way to put it. You feel it, the app's right there, zero friction. Boom, you've acted on it.
Okay, so this whole Gamble America thing, it really does feel like it just exploded out of nowhere. Suddenly, something that was kind of taboo is just normal everywhere.
Oh.
How do we get here so fast?
Yeah, that speed is remarkable. For most of the 20th century, like you said, sports gambling had this real moral stain on it.
Right, like the Black Sox scandal back in 1919, players throwing the World Series. That really cemented the idea that gambling just corrupts sports.
Absolutely. And that perception got baked into law. PSPA, the Professional and Amateur Sports Protection Act of 1992, that basically told states, nope, you can't legalize this.
So it was underground or Vegas or those sketchy offshore websites.
Pretty much. Confined to the shadows. But the turning point, the moment John Cohen calls uncorking the champagne bottle.
When is that?
2018, that huge Supreme Court decision. They looked at PSPA and basically said, actually, this violates states' rights.
Ah, so the federal ban was struck down.
Exactly. Opened the floodgates. And the cultural shift since then, it's truly breathtaking.
Less than a decade, right? We went from Pete Rose, the ultimate cautionary tale, banned from baseball forever for betting,
to announcers casually dropping point spreads and over-unders during a live broadcast as if it's just part of the game's stats now.
It's a total 180. Breathtaking is right. And it's not just casual mentions, is it? The whole language of sports journalism has kind of absorbed gambling terms.
Completely. Spreads, overs, unders, value plays. These are now standard terms in pregame shows, halftime analysis, postgame wraps.
So the coverage almost assumes you care about the betting angle.
It implicitly assumes you might have a financial stake, yeah. It further blurs that line between being a fan and being a speculator. It's not just about who wins, but by how much and did they cover.
It cultivates that betting mindset, makes it feel normal, almost necessary to be a modern fan.
Exactly.
And a massive driver of this normalization has got to be the advertising.
Yeah.
The sheer volume of it.
Oh, the advertising blitz.
Mm-hmm.
Unbelievable. FanDuel and DraftKings, who basically have a duopoly, right? Controlling like 80–90% of the market.
Yeah, it's mostly those two, you see.
They didn't just advertise, they poured billions, literally multi-billions of dollars into what our sources call cultural programming.
Cultural programming, what does that mean?
Basically reshaping what it means to be a sports fan today, redefining the experience.
How'd they do that? Celebrity endorsements.
Tons of them. Jamie Foxx, Kevin Hart, J.B. Smoove. Guys who aren't necessarily huge sports nuts themselves.
Right, making it seem accessible, not just for hardcore fans.
Exactly. Making it feel like an everyman's game. Less intimidating, especially for people who maybe weren't crazy, weird sports fans, but enjoyed watching and liked the idea of adding a little excitement.
So the explicit goal was just normalization.
Total normalization. Get people used to betting being part of their sports viewing experience. Make it routine.
Like that second screen experience they talk about. Watching the game on TV, phone in hand with the betting app open.
Precisely. That seamless integration, it removes all the old friction, right?
Yeah, no more figuring out Bitcoin to bet offshore or meeting some shady bookie.
Nope. Now it's just a tap on your phone. Use your debit card, PayPal. Easy as ordering pizza. That ease plus the constant exposure. It's powerful.
It really is fascinating how deliberate that whole process was.
Yeah.
To change perception so quickly.
But it wasn't just the advertising and the slick apps. There's an even more unsettling piece to this puzzle.
What's that?
Institutional complicity. John Cohen's research found something pretty damning. It wasn't like lobbyists quietly twisting arms behind the scenes, regulatory capture.
No.
Worse, he says lawmakers were enthusiastically opening the doors to the henhouse.
Enthusiastically, why? What was the motivation?
Simple money. States, especially when COVID hit and budgets were slammed, they saw sports betting as this magic bullet, a free source of revenue that didn't require any taxes.
The lure of easy money without raising taxes.
Bingo. Seemed like a political free lunch.
That's deeply cynical.
Yeah.
You'd hope for more caution from legislators. But did that promised revenue actually, show up?
Not nearly as much as they dreamed. The sources give some pretty stark examples. Kansas expected maybe $100 million a year. They collected $12 million in 2023.
Ouch. Only 12% of the forecast.
Arizona projected $100 million, got $26 million. In Colorado, the tax rate they thought they'd get, around 10%, ended up being under 5%.
Oh.
Because the betting companies could deduct all those huge promotional costs, the free bets, the deposit matches from their taxable revenue. So they deferred paying big taxes while they were busy acquiring customers. Classic bait and switch.
So the states got played.
Pretty much. Cohen puts it starkly. He says, red and blue lawmakers alike have shown that they're just total suckers when it comes to gambling revenue. They'll just say yes to anything because it seems too good to pass up.
Wow. Bipartisan gullibility.
And if you connect this to the bigger picture, Cohen wrote about state lotteries before this. Same pattern.
How so?
It's not just individuals being irrational chasing jackpots. It's institutions, governments, chasing these impossible dreams of a tax-free bonanza.
So they're gambling with state budgets based on unreliable projections.
Essentially, yes. And the really profound implication here, the state becomes a partner, a stakeholder in an industry that profits directly from the financial struggles of its own citizens.
That creates a really messed up incentive structure, doesn't it? Public good versus state revenue.
Totally perverse. It really forces you to ask about the long-term costs versus those short-term, often disappointing revenue gains. It's a gamble the states took and are still taking.
Okay, we've talked a lot about the human cost, the societal shift. But this whole Gamble America thing, it doesn't just happen, right? There's a massive, sophisticated business engine behind it all.
Oh, absolutely. A huge financial machine humming away, driving this whole industry.
Let's pull back the curtain on that engine. Who are the companies making this possible? We mentioned a couple earlier, Gambling.com Group, GAMB on NASDAQ.
Right. Gambling.com Group. They are a really interesting piece of the puzzle. Super fast-growing, very savvy provider of marketing services, and also sports data for the global online gambling world.
So what do they actually do?
Think of them as expert matchmakers, or maybe digital bloodhounds. Their main job is finding new depositing customers, NDCs they call them, and sending them over to the actual online casinos and sportsbooks.
Okay, so they're like an affiliate marketing company, but for gambling.
That's a big part of it. Their business model is pretty diverse, though. They get paid in a few ways for sending those players.
Like how?
One way is cost per acquisition, CPA. They get a flat fee for every new depositing customer they deliver. Pretty standard digital marketing stuff.
Yep.
But then there's the revenue share model, and this is key. Here, they get a percentage of the net revenue that the players they referred generate for the casino or sportsbook over time.
Ah, so they're incentivized not just to find any player, but players who will bet more, potentially lose more long-term?
Exactly. It aligns their incentives directly with the operator's profits from that player. It's a powerful, ongoing revenue stream for them. Or sometimes they do a hybrid, a mix of upfront CPA and longer-term rev share.
Smart. But you said they do data services too.
Yeah, that's a big and growing part. They offer subscription services, some for regular consumers, tools like OddsJam, which compares betting odds in real time across different sports books, or RotoWire, which is huge for fantasy sports news and tools.
Well, I've heard of RotoWire.
And then they also sell data to businesses, enterprise subscriptions for things like Optic Odds, which provides really advanced sports betting data APIs and trading services for sophisticated bettors or even other operators.
So they're selling picks and tools.
More like data feeds and comparison tools. This subscription revenue is significant, it's recurring, and it's growing fast, accounted for like 25% of their total revenue in Q2 2025.
So it's a steadier income stream than just the marketing fees.
Yeah, more predictable. They've positioned themselves as this sort of low-risk, high-return platform for customer acquisition in the gambling space. Kind of like Booking.com for travel or NerdWallet for finance. They're the intermediary.
And they're big. What's their reach?
Oh yeah, they're global. Over 50 websites, operating in 19 different countries, 10 languages. They generated almost 500,000 new players, 479,000 for their clients in 2024 alone.
Wow. 500,000. And financially, how are they doing? Sounds like they should be booming.
They are. Fiscal year 2024, they did $127.2 million in revenue, $30.7 million in net income, and their adjusted EBITDA margin was 38%.
38% margin. That's really strong, isn't it? Especially for a marketing data company. Shows how profitable this industry is.
Very efficient operation. And the growth isn't slowing. Q2 2025, revenue up 30% year over year, adjusted EBITDA up 22%.
And that data services part you mentioned.
Quadrupled. Data services revenue quadrupled to $10 million in that quarter. Sports product revenue jumped 82%. Shows they're successfully diversifying into those stickier recurring revenue streams.
So what's their outlook? Still growing?
Looks like it. Their forecast for FY 2025 is revenue between $171 and $175 million. That's like 36% growth year over year. And adjusted EBITDA between $62 and $64 million, up around 29%. The numbers tell a story of a company just expertly riding this Gamble America wave.
And they're not just staying digital, right? You mentioned they're moving into the physical world, too.
Yeah, which is interesting. They're buying Spotlight. Vegas, it's a Las Vegas booking platform for shows, hotels, events. That deal should close soon.
So that brings in the brick-and-mortar casinos as clients.
Exactly. Expands their client base, diversifies revenue. They expect it to add $8 million in revenue and $1.4 million in EBITDA in 2026. Plus, they've got these big media partnerships.
Woohoo.
Major outlets like Gannett, which owns USA Today, and a ton of local papers, and The Independent over in the UK. Gambling.com provides content and data to help these media companies monetize all the sports betting interest on their websites.
So gambling content is now embedded right into mainstream news sites.
Highly integrated. It really shows how intertwined gambling has become with media.
Now, does a company like this talk about responsible gaming at all, given their business model?
They do make a point of it publicly. Their EVP for North America, Max Bixel, actually chairs the Responsible Gaming Affiliates Association, RGAA.
Okay.
And the company says it has restrictive ad policies, promotes responsible gambling info on its sites, and only works in regulated markets, never with those offshore operators targeting the U.S.
So they're trying to position themselves as responsible players within the regulated system.
That's the outward message, yeah. It highlights that the industry is aware of the potential harms, even as its business thrives on, high engagement.
Okay, so Gambling.com Group is the marketing and data engine, getting players to the platforms. But what keeps them there? What makes the actual betting experience so sticky, so immersive? That's where companies like Evolution AB come in, right? EVO.
Exactly. Evolution is a giant in the B2B business-to-business side of this. They don't run their own casinos facing consumers. Instead, they license their technology and services to the online gambling operators like FanDuel or DraftKings or BetMGM.
And what services do they provide?
They provide the live casino experience. It's a complete package. Professional dealers operating from sophisticated studios streamed in high-definition video.
Yeah.
Makes it feel like you're right there at the table.
So live blackjack, live roulette streamed to your phone.
Yep. All the traditional table games, but also, and this is huge for them, these innovative game show style experiences. Things like Monopoly Live or Crazy Time, super engaging, visually flashy.
I've seen ads for those. They look intense.
They are, and Evolution dominates this live casino market. They have something like over 60% market share. Their closest competitor, Playtech, is way behind at maybe 15%.
60%, that's huge market dominance.
It is. And their live casino segment grew 38% from 2019-2023, much faster than the overall market growth of 24%. They're the leader by far.
Analysts talk about Evolution having a wide moat. Like, it's really hard to compete with them. Why is that? What makes them so dominant?
It's a few things working together, host. First, just massive barriers to entry. For an operator like DraftKings to build its own live casino setup from scratch, hugely expensive. Studios, tech, hiring, and training hundreds of dealers. It's way easier and cheaper to just license it from Evolution.
Okay, so it's costly to replicate.
Extremely. Second, their product is just better. Because they have that scale, they can invest way more in innovation. They launched over 100 new games in 2023. Playtech did maybe 2025.
So more variety keeps players interested.
And critically, Evolution's games actually make more money for the operators. Sources say their games generate 2 to 3 times more revenue than competitors' games, even comparing the same game type.
Wow. So even if Evolution charges more, the operators still make more profit using their games.
That seems to be the case. It creates this powerful network effect. Players get used to Evolution's games and interface. Operators make more money. It becomes really hard for operators to justify switching away. That's the moat.
And financially, they've been described as having unbelievably explosive growth.
Understatement. Revenue up an average of 44% year over year for the last 5 years. Profit and operating cash flow have basically doubled since 2021. Operating income is up nearly 400%.
Good grief.
Plus, they have a pristine balance sheet, almost $650 million in net cash. And they plan to return all their excess cash to shareholders through buybacks. Financially, they are an absolute juggernaut.
It's the bet, isn't there? Their stock price hasn't exactly reflected that explosive growth recently.
That's the paradox, yeah. Despite these incredible financials, the stock price is down over 60% from its peak in 2021, which leads some analysts to say it's severely undervalued.
Why the disconnect?
Well, looking at valuation metrics, the PEG ratio is incredibly low, like 0.28x. That suggests the market isn't pricing in its growth potential. The PE ratio is at an all-time low. Some analyses suggest the stock could be worth 300% more based on discounted cash flow.
So what are the risks holding it back? Regulation.
Regulation is definitely a big one. They operate globally, so they face hurdles everywhere. Also, the risk of an economic downturn hitting consumer spending on gambling. And then there are the ethical concerns.
ESG investing. Some funds just won't touch gambling stocks.
Exactly. That can limit the pool of potential institutional investors regardless of the financial performance. So you have this incredibly profitable, dominant company powering the immersive side of online gambling, but facing these external pressures and valuation questions.
So what does all this sophisticated business infrastructure mean when we bring it back down to the human level?
Yeah, after diving into that business side, the sheer scale and efficiency, it's crucial we circle back to the human element. Because behind all those revenue numbers and EBITDA margins, there's a very real, often devastating human cost.
John Cohen's research really emphasized this, didn't it? Why gambling addiction is uniquely insidious.
That is, he makes this really important distinction. With, say, drug or alcohol addiction, there's no logical way to think one more drink or one more hit will magically solve all your problems. Your brain knows it doesn't work like that.
Right.
But with gambling, a person can logically convince themselves, or at least feel like it's logical, that the next bet could be the one that wins back everything they lost, wipes out the debt, makes it all okay.
That creates a terrible loop, doesn't it? Always chasing the win that will fix everything.
A truly nasty cycle, as Cohen calls it.
Act like.
Endless chasing. He tells this story, this anecdote about a bettor who'd lost a lot but somehow managed to claw his way back to break even.
Okay, so he got out. That's great.
You'd think most people would stop, breathe a huge sigh of relief, but no. He had been up $40,000 at one point earlier. So even though he was break even, he felt like he'd lost that 40-tire profit.
Oh, no.
So he kept chasing that peak gain, fell right back into debt, even deeper than before. The cycle just starts again, feeling more desperate each time.
And while that chasing behavior isn't new, the difference now is.
The difference now, Cohen argues powerfully, is how incredibly easy the government and these corporations have made it to have that exact devastating experience right from your own couch.
Zero friction. Instant access. 247 temptation.
Exactly. It takes that dangerous psychological lube and just pours gasoline on it. Makes it relentless, almost inescapable for some.
And the data shows this is hitting certain groups harder than others, right? Specifically young men.
Disproportionately, yes. Young men aged roughly 18 to 49. Our sources say a staggering 39%, nearly 2 out of 5 in that group, have online betting accounts.
39%, that's huge.
And they're experiencing problematic gambling at much higher rates, losing way more money than they intended, often money they couldn't afford to lose.
There was that alarming stat about paying bills.
Yeah, truly alarming. Pluralities, meaning the largest single group, even if not a majority of young men aged 18 to 35, admit this has happened to them at least once. They couldn't pay a basic bill, rent, utilities, whatever, because of gambling losses.
That's not just a few isolated cases. That's widespread financial distress directly linked to betting.
Deeply rooted in demographics, the environment, and the product design, especially for college students. Cohen calls their environment full of tripwires everywhere.
What kind of tripwires?
Well, you've got the intense sports culture on campus, peer pressure, competition, combine that with brains still developing impulse control.
An app designed to exploit overconfidence.
Exactly. It's a perfect storm. He draws an analogy to unsafe drinking in college.
How so?
Well, some students can drink responsibly, right? But even one night of really excessive drinking can have catastrophic consequences. Same with gambling. A young person can blow all their tuition money, wreck their credit, get unable to pay bills, or worse, trigger a lifelong addiction. It's just a really vulnerable time and place.
And the absolute worst outcome.
Yeah.
The connection to suicide. That's terrifying.
It is. Cohen states it very clearly. Gambling addiction is the addiction most closely associated with suicide. The data, especially from the UK where online betting arrived earlier, it's chilling.
What did the UK data show?
Young men with problem gambling issues had suicide attempt rates 9 times higher than their peers who didn't gamble. Public Health England estimated something like 409 suicides per year in England alone were related to gambling.
400 people a year, just in England. That's staggering. The ultimate human cost.
And beyond that tragedy, there are all these other ripples of harm, right? More bankruptcies, higher credit card debt, people investing less in the stock market because the money's going to betting apps, lower savings rates for families who bet heavily.
So it's hitting personal finances, family finances, potentially even broader economic health.
We're seeing tangible evidence of this financial insecurity rising, people literally gambling away their futures. And it brings us back to the point that this isn't just about individual bad choices.
No, it feels systemic.
Cohen calls it a reckless rollout of an industry designed to inculcate gambling, to basically create a new generation of gamblers. It's soliciting bets that just wouldn't have happened otherwise, making it dangerously easy for these destructive cycles to start and spin out of control.
It really makes you question the trade-offs, doesn't it? State revenue versus this level of human and societal cost.
And just when you think regulated sports betting is complicated enough, new things are already popping up, even more aggressive models.
Like what? What's coming next?
Well, platforms like Kalshi, which partnered with Robinhood, they operate as prediction markets.
Prediction markets. Sounds kind of like betting.
It essentially is. But instead of just sports, you can bet on almost anything. The weather tomorrow, election results, commodity prices, even like celebrity behavior.
Seriously? Betting on celebrity behavior.
Stuff like that, yeah. And it's often through the same slick app you might use to buy stocks, which gives it this veneer of legitimacy, right? Like it's sophisticated financial prediction, not just gambling. More deceptive.
And what's the logic they use? How do they operate?
They often use what some call the Uber logic. They claim, hey, we're just the platform. We just connect people who want to bet against each other, peer-to-peer.
So they argue they shouldn't need the same heavy regulation as a traditional sportsbook or casino.
Exactly. And the source we looked at raises this concern. These new players with their super broad scope and this just a platform argument, they might actually make DraftKings and FanDuel look benign and responsible in comparison.
How could they be worse?
Because they often lack even the minimal safeguards that regulated sportsbooks have. Things like self-exclusion tools, robust ID checks for problem gamblers. These new platforms might have even less friction and fewer guardrails.
So if we're already seeing these problems with regulated sports betting, what happens when you can bet on literally anything with even fewer protections?
That's the scary question, isn't it? What are the consequences when every single opinion, every prediction about anything becomes a potential win or loss in an even less regulated space?
It really pushes us towards that bigger, kind of unsettling question about where society is heading.
Yeah.
What happens when we decide that everything should be monetizable? Every opinion, every social interaction generating revenue, every creative thought becoming a side hustle. And yeah, every sports prediction becoming a financial position.
It's this relentless drive, isn't it, to find profit in every corner of human experience. It feels exhausting sometimes.
Totally. Like there's no space left just to be without thinking about how to monetize it.
And it makes you think, have we basically scanned the entire range of human psychology, our hopes, our fears, our uncertainties, and just asked, okay, how can we turn each of these into a profit center?
Systematically engineering profit from vulnerability.
It transforms our humanity into just another commodity, always pushing us to engage with the market, always performing, always speculating. And that image from the sources really sticks with you.
Which one?
The house always wins, you know? But what happens when the house is everywhere?
Not just in Vegas.
Exactly. In your pocket, your feed, your brain. It's not just gambling anymore. It's about the fundamental design of our digital lives, our economy.
What kind of society are we building if it's powered by our worst instincts, by monetized uncertainty? Heavy stuff.
It is heavy. So given how entrenched this all is, this gamble America where the house is everywhere, what do we do? How do we find a way forward?
Well, one key idea that came up, especially from John Cohen's work, is this need for gambling literacy.
Gambling literacy. Okay, what does that entail?
Treating it like other essential literacies. We teach digital, financial, media literacy. It's about empowering people, especially young folks, to actually understand how these slick systems work, not just how they look on the surface.
So pulling back the curtain on the psychology and the business model?
Exactly. Cohen even suggests maybe revamping high school health classes or economics classes to tackle this stuff directly. Like we teach about the dangers of alcohol or drugs.
Makes sense. He had that quote, didn't he, about the first bet being the dangerous part.
Yeah, he said, even just telling people how that process works, that when you win your first bet, that's actually the dangerous part, that's how they get you. I don't think people realize that.
So education is key. Demystifying the whole thing. Building counter-narratives to all that glossy advertising.
Right. Helping people understand that realistically, you're not going to get rich long-term from sports betting.
Because fundamentally, the house always wins. And crucially, even if you do start winning consistently.
They'll limit you, right? The sports books won't just let you keep taking their money.
Exactly. They'll restrict your bets, maybe even close your account. Understanding that the system isn't designed for you to profit long-term, that's a vital piece of gambling literacy, it could really change how people approach it.
Beyond just education, though, Cohen suggested some concrete rule changes, didn't he? Actual regulations.
Yeah, moving beyond just putting all the responsibility on the individual.
Like what?
Like maybe restricting betting on really obscure stuff. Minor league British darts was his example. Or betting on a coin toss. Does that really add value? Or just create more opportunities for compulsive betting?
Good question. More frequent low engagement bets might be more dangerous.
And maybe more significantly, he talked about requiring proof of income or assets to set betting limits.
So the onus shifts. Not just bet responsibly, but the system actually stops you from betting more than you can demonstrably afford.
Exactly. Putting some responsibility back on the corporations and the regulators, making it harder for people to get into deep financial trouble. Proactive guardrails built into the system itself.
That would be a big shift. Are these ideas being heard?
Oh, well, there are experts working on responsible gambling solutions, people with evidence-based ideas. But yeah, their voices often get drowned out by the sheer financial momentum of the industry and, frankly, the government's desire for that revenue we talked about.
So it would take real political will to implement stuff like that, to challenge that institutional complicity.
A very difficult but maybe necessary conversation to have.
When we think back to Kyle and Ryan, those two young guys, it really does feel like they were, as the sources put it, guinea pigs or beta testers for this whole new economy.
Yeah, both smart, tech-savvy, confident, traits that usually serve you well today.
But Kyle got caught in the machine. That dopamine loop, the illusion of an edge, it cost him dearly.
Tragically, yes. But Ryan, he saw the trap, he felt things getting harder, he didn't like losing, and he pulled back. He adapted.
And maybe that's where the glimmer of hope is.
Perhaps, as the source said, tests help you adapt and learn and develop immunity. There is hope.
So the experiences of this generation, even the really tough ones, could teach us something. Help protect future generations.
It's possible. Those hard-won lessons could inform better regulations, better education, maybe help the next wave not get so fried, as the source put it. It speaks to our ability to learn, hopefully, even from reckless experiments. The big question is, will we learn? Will we make the changes? #tag outro.
Well, this deep dive into Gamble America, it really shows this isn't just about betting on sports, is it? It's about something much bigger, more pervasive. This relentless drive to monetize every single human uncertainty, every opinion.
Amplified like crazy by technology, by sophisticated psychological design. It creates this constant tension, doesn't it? Between our freedom to bet, to have an opinion, to speculate, and the way these platforms are built to exploit those very freedoms.
That's deliberate exploitation baked right in.
So thinking about the listener, what does this all mean for you? Maybe consider this. We're in an economy that's getting better and better at extracting value from our psychological vulnerabilities.
And our governments are increasingly dependent on the revenue from those same activities.
So how do we make sure our society doesn't just get completely driven by our worst instincts? How do we protect people when the house isn't just a building in Vegas anymore?
When the house is everywhere.
Yeah.
In your pocket, on your feed.
Whispering in your ear, messing with your brain chemistry. It's a really profound question for all of us, isn't it? The choices we're making right now about regulation, about education, about ethical tech design, they're going to shape the kind of society we live in tomorrow and the one we leave for the next generation.